guys, welcome to our channel. So we always do we always have a session every single week where at Financial Lab where we get to discuss a book. We have this culture of reading at least a book a week for every person who's on the team. So we review these books on a session called Brain Station, and we thought about it and decided we could maybe start off by doing some books and sharing some books that we have read and we think have been of impact to us. So we want to share with you some of these books and some of the key concepts that we got from these books, and we'll be doing some videos. So in this video, we'll start off with trading in the zone, and I can maybe start off by telling you what trading in the zone. Trading in the zone is basically a book that talks about how trading psychology. It talks about the trading psychology, and the hard part of trading, or the hard part to master in trading, is actually the psychology part, where you get to understand yourself and to understand how best you perform when you're under pressure. We actually think the markets will act as a mirror, just reflecting what's inside of you. So the markets will not be brutal to anyone, will not be friendly to anyone. The markets are the markets, but how you trade comes down to you, and it takes quite some time to adapt to the market environment and to understand how markets really work. So Trading in the Zone is a basic book that writes about psychology and how you can master the psychology of trading, I think.
Yeah, and basically why we really love this book is the fact that it's one of the first books that introduced us to trading psychology. And long time when we used to analyze the market, when something went wrong, we used to analyze the charts to see what went wrong, what's going on. So we used to look for answers outside. But when we came to learn this book, Trading in the Zone, by Mark Douglas,
It's by Mark Douglas, by the Mark
who
Douglas
recently passed away.
Yeah.
And basically why it really helped us is the fact that to become professional in trading, you need to understand the nature of the markets, and to understand the nature of the markets, you also need to understand yourself and how you present yourself to the markets. And that's what gives you an edge and what makes you successful. It's not always about analyzing the charts and always looking for a chart pattern, a setup. That won't make you successful. You have to understand how people think in crowds, how the people who make lots of money, how they think, and how they go against the retail traders who think in crowds and make silly decisions.
Yeah. So I think to start off, I can point out one of the key lessons that was in that book, and it was about how beliefs structure, how beliefs shape you, and how you can just learn some beliefs out of hypnosis. It's hypnosis, yeah, where you get to learn not by reading a book or by doing something. You actually learn by just perhaps living in a certain environment, where if people in a certain environment fear something, you automatically tend to have the belief that that thing is dangerous. So you maybe fear it and it's not really dangerous, but you just feared it based on the belief of others. That's hypnosis, where you get to learn from that. So I think one of the things that was really clear was you need to alter the beliefs that will interfere with you profiting from the markets. So you need to change the beliefs that block you from being able to profit in the markets. For example, the belief that you have to be right on every trade in order for you to become successful in the markets. That's practically not applicable, it's practically impossible, and it's not what you really need for you to become successful in the markets. What you really need is an edge, and identifying the edge and maximizing when the edge is to your favor. So that's one of the things that you really need to change some of the beliefs that have been programmed to you as you are learning and as you are progressing in life. When you come to the markets, you need to alter some of those beliefs and to keep them aside in order for you to be profitable. I think that was one of the key lessons that I learned about how beliefs really shape our lives. Yeah.
Personally, in our trading, in our brain stations, what we also talked about is expectations.
Yeah.
And basically, expectations, according to Mark Douglas, is the internal representation of how a future moment in our environment will smell like, taste like, feel like, look like, and
all this you
the
can
five senses. And I think
taste, feel,
smell, hear like,
yeah.
sound like. And basically, if you put so much emotion on this energy and this expectation is not met, the more frustrating it will be, how you'll be really hurt. And basically what he's telling you is that never have high expectation that you'll always be right in the markets. You can't always be right. something we keep talking about is in the markets, you have to always breathe in and breathe out.
Yeah.
Just like in life, you have to breathe in, breathe out. And basically, when you're talking about that in the market, it means you have to make profits and at times you'll make losses. But if you study the end game, you'll always, along the way there'll be ups and downs, you'll have losses, but at the end of the day, you'll come out profitable. So when it comes to expectations, don't always put your expectations 100%, I have to be right. Because if you're not right and the trade goes against you and you make a really huge loss, you'll feel so much pain and so much anger and blame the markets and always be against that you'll never make money. So that's something we learned in psychology. Always learn to control your emotions and your expectations and have a risk management so that you're not always frustrated on the outcome of the trades.
Yeah. And to perhaps give you some other key lesson that Caleb had earlier highlighted was how most of the traders were obsessed with analyzing and coming up with the best formula or looking for the Holy Grail and such things. Well, the Holy Grail really in trading is understanding the nature of the markets and understanding the nature, your own nature. How are you programmed and how can you reprogram what you have been programmed into in order to be successful in the markets? So understanding the nature of the markets, one thing you'll understand definitely is markets are random. You never know which trade is right, which one is wrong before you execute. You just execute and you wait for the outcome. That's a nature of the markets. So already if you are in conflict with that nature of the markets, then you won't be able to succeed in the markets and to understand how you can best program yourself and how you can best position yourself to benefit in such an environment. Again, you understand that no matter the analysis you have or no matter the edge you have in the markets, you can always be wrong. That's something that you have to put at the back of your mind.
Yeah.
Never to think that you know too much, unlike the other traders or unlike the market where you get to think that you know better than the market. So those are some of the things that you understand about the nature of the market, and you have to really know them first before you just dive into trading and start to make money. Understanding yourself is you maybe know that your risk appetite is high, so you perhaps can survive being a day trader.
Aggressive.
Yeah, and you can be aggressive in the position sizes you take because a loss won't really hurt you like someone who's more conservative, who, we are different. Someone can lose 10,000 and it's okay, I'll make it back. But someone else can lose 10,000 and that marks the beginning of mental trauma and thinking about it a lot. So you also need to understand how you are wired. But we're also not saying how you are wired, you cannot change it. We're saying you understand how you are wired and how you can change it so that you can be able to benefit in the market. So understanding yourself and understanding the nature of our markets, I think, is an edge that most traders are not taking advantage of and are more focused on getting the Holy Grail, getting a system that has 70% or 80% win rate. Some of those silly things which will not really be applicable in real life trading and live trading, where you get to manage a portfolio and to understand how to structure the portfolio well. So that's one of the things, again, that I think we need to familiarize ourselves with our own behaviors.
And one of the biggest lessons, that we really love, we learned from this book is the story on macro level and micro level. I'll expound about it. How does he say it? You remember exactly? How does he
says that you have to be, in order for you to be successful in the game of trading, you have to believe that in the micro level you won't be able to know the outcome of each single trade, but at the macro level you'll be able to make money based on your consistency on each and every trade that comes. I'm not really getting the exact words that he says, but that's a gist of what the quote is all about. So
and basically what he's talking about, when you talk about the micro level, he's talking about when you take one trade, you'll never know about the outcome of that trade. It can either be a win or a loss. So at micro level, it's hard to predict.
It's actually, you have to believe at the micro level at the unpredictability of the game, but at the macro level you have to believe at the predictability of your results. So that's the thing.
And what he's saying, at micro level, at that one trade, you can't predict which trade will be right. But on a on a macro level, the sequence of trades, you're sure at the end of the day you'll be successful and profitable. So you can predict the outcome. What we really mean is that in trading, there's human patterns, human nature.
Human nature.
Human nature, and human nature, if you study it, it's repetitive.
Cyclic.
it's cyclic, so it always reoccurs and reoccurs again. So if you study this and put it in and bring it in the market, you always know this is how people react and this is what they'll do in the market at this certain time, and this is how it will react.
Yeah.
If a certain news comes out, you're sure you've seen it over and over again. So at the macro level, at that different trades,
When you execute
very many trades, you're sure at the end of the day will be successful and profitable. So that's what we mean that at the macro level you can.
you can believe in the predictability of your results, but at the micro level, you have to believe in the unpredictability of each single trade that you execute. So
Yeah, and if you understand that, basically, if you make a loss, you don't feel bad, you
Yeah.
don't feel frustrated. You know, okay, this one time maybe something went amiss, and next time you learn from your mistake, and that's what we do from failures. We basically learn from them, so we don't consider them failures. It's the money you pay
for learning what
for
not
learning.
to do. Yeah.
Exactly, and you won't repeat them, and later on you'll make so much money. And that's why we tell people, don't always start with huge amounts of money. Start with
Little amount of
little
money.
amount of money that you can practice with, because what you'll do at this small level at with little money, you'll do the same with when you have large money.
Yeah.
And basically that's what we really learned according to with the macro and micro.
Micro level. So I think to also perhaps make your point more clear is Dr. Brett, one of the best trading psychologists actually in the book, I think, Enhancing Trader Performance. He talks about how in trading you have to, the key to success in trading is making those mistakes in the early stages of your development before you have too much in the line. So what he talks about is you have to make those mistakes when you still have a small account, such that those mistakes will shape you such that when you have a big account, you'll not face the small mistakes. So you often get that someone maybe comes into trading, he has not learned how to go about it, he has not gotten the skill yet, he has not understood how markets are and how painful it is to lose money, and you perhaps want to put too much on the line. When you put too much on the line, the probability of you coming back to the markets after losing that amount is almost negligible. You'll feel so much pain that it will be hard for you to come back. But again, when you make those
Yeah.
stages early in your development, when you're learning how to trade and you're taking those baby steps, learning just like a baby learns how to walk, then how to run, and then finally how to. So I think you also need to factor in that, like you're saying, at the early stages of your development, you master the markets and you understand how to go about it before you have too much on the line, where you have to be so cautious and you have built the experience and the skill of understanding markets. So I
Yeah,
think
and
that's
maybe
one.
another point we can talk about. In the book, Mark Douglas talked about psychological zone.
Yeah.
And he basically talked about this when he was saying this comes about the zone is being in this when you talk about psychological zone, is basically when you're in the moment, in the present moment, in the now. You're not thinking about the past and you're not thinking about the future, basically in the present.
Yeah.
So you're not thinking about your past trades, how you lost or how you won, because if you think about how you lost when you're in the present moment, you'll always think your trades will be a loser. If you think about how you won all the time, you'll think you're a god in the markets, so your expectations will be really high. And we've talked about expectations. So psychological zone comes with experience, with understanding the markets and understanding yourself. Those two things are very important: understanding the markets and understanding yourself. That will help you get an edge in the market. So when you're in the zone, you have a feel for the market, you're in sync with the market. When a trade comes, you know if this is a buy or a sell. And that's really important. And that's come with time, because it's basically when you're rewiring your mind and becoming part of the market and being able to flow with it.
Yeah. So I think to sum up, we can talk about how I think one of the very, very good points that Mark Douglas highlights is about discipline. He talks about how discipline is the thought methodology, or the process of having the idea of doing away with any thoughts or doing away with anything that distracts you from attaining your objective. I think that's one of the things that we really need to sit down
So
and
basically also, just like I was saying, being in the present.
yeah,
Because
being in the, you're just doing away with anything that distracts you from
Yes,
exactly, which is also discipline. So you have to cultivate that level of discipline where you put anything aside that interferes with you attaining your objective. So that was one of the things that really fascinated me. And you know, in the markets, how tough that is. Your ego will always be there, your emotions will always be there, other people's opinions will always be there, distractions from news and such things will always come. So for you to have that level of discipline where you stand by your own and you do what you believe will lead you to attaining your objective is one of the things that really fascinated me in that book, Trading in the Zone. So I think that's one of the key points. Again, I can also highlight the final point on where Mark Douglas he asks a very simple question, which is, do you believe you need to be right on every scenario in order to make money, and do you believe you need to lose money in every scenario where you're wrong? I think if you think of it in a different context, you'll discover that you can lose money when you're right, and you can also lose money when you're wrong. You can make money when you're right, and you can also make money when you're wrong. It's all about a matter of being in the zone, just like Caleb is saying. If you're wrong and you realize you're wrong pretty fast and you reverse your position, you'll definitely end up as you made good cash. But even if you are right and executed the trade, perhaps 20-40 pips to your side, then it finally reversed without you going out, then you lose money on a right idea. So you need to have that belief that you can be able to make money and lose money whether you are right or wrong. Making money is a different matter from being right or wrong in the markets.
Yeah, and just to conclude and finish up with the saying from a trader, what they said with what Ken is talking about, making and losing money, is about being right and being wrong. Is there's a trader who once said, what is really important is not the fact that whether you're right or wrong. What is important is how much money you make when you're right and how much money you lose when you're wrong. That will always give you an edge, because when you're right, you can make a lot of money. You can maximize on the days you're right, and when you're losing, you can minimize your losses by realizing that this is an actually wrong trade and you need to come out early. So that at the end of the day, even if you have 100 losses and let's say 50 wins, and you won big on the wins and lost a little on the losses, you'll always become profitable. And that's basically what we've learned in Trading in the Zone. We'll be doing more and more videos, and we'll be sharing with you guys what we've learned from various books. Not just trading books. We'll also talk about. We have dozens of content and books that we'll talk about and we'd like to share with you people. So make sure you subscribe below. We'll be sharing with you every week. We'll be having videos on our YouTube page, and we'll also on our social media platforms. So have a good one, guys, and enjoy the week, enjoy the weekend.
Cheers, guys.